Hey everyone, welcome back. So today we're going to tear into Moody's latest earnings report. And honestly, what we found is this incredible playbook for not just surviving, but actually thriving in the age of AI. All right, let's just dive right in.
We're smack in the middle of this massive AI gold rush. And all the attention, it's on the miners, the chip makers, the folks building the big models. But if you look at history, in any gold rush, the people who really make the lasting fortunes are the ones selling the picks and shovels. So it begs the question, right? Who's supplying this whole digital revolution?
And that, believe it or not, brings us to Moody's. Yeah, that Moody's, the credit rating agency. They have positioned themselves perfectly, not as the guys digging for AI gold, but as the essential suppliers of the tools you need for the whole operation. It's a classic picks and shovels play, and it's just brilliant.
Okay, so here's where it gets really interesting. You've got to see the company as two separate parts. On one side, you have Moody's Investors Service, or MIS. Think of these as the picks. This is their traditional ratings business that unlocks all the money needed to build the actual physical infrastructure for AI. Then on the other side, you have Moody's Analytics, or MA. These are the shovels, the data, the analytics, the stuff that actually makes AI smart. Two totally different roles, but both are going after one massive opportunity.
So let's start with the picks. To build out this AI future, you need a staggering amount of money for physical things. We're talking servers, data centers, whole new power grids. And that's exactly where Moody's classic business model comes into play.
And the scale here, it's just mind-boggling. In 2025 alone, Moody's rated a record-breaking $6.6 trillion of debt. Think about that. A huge portion of that is going either directly or indirectly into funding this AI build-out. This isn't some side hustle for them, it's the financial bedrock of this whole revolution.
So who's raising all this cash? Well, the names are exactly who you'd expect. You've got your AI hyperscalers, your Googles, Amazons, Metas. They raised over $70 billion in just one quarter for their AI programs. Then you've got the data centers, the energy companies that have to power these things. And then there's the private credit market, which is just exploding. Moody's is sitting right in the middle of every single one of these deals, providing the ratings that let the money flow.
But look, financing the hardware, that's only half the story. Let's pivot to the other side of the business, which you could argue is even more valuable. We're talking about the shovels, the actual data that makes AI useful. And this is the world of Moody's Analytics.
This quote from Moody's CEO Rod Fauber is everything. It's the key to their entire strategy. See, in a world that's just flooded with information and AI-generated stuff, the real value isn't just more data, it's trusted context. AI models are incredibly powerful, but they're useless, or honestly even dangerous, for big decisions if you train them on garbage information.
And this brings us to this critical concept they call decision-grade data. Now, this is not the kind of stuff an AI can just go scrape off the public web. No way. This is data that's been curated, verified, and structured over decades. It has a clear history, which makes it reliable enough for, say, a bank to approve a massive loan, or for a regulator to assess risk. And this is not just some abstract idea. Look at how this works in the real world. A top-tier bank is using Moody's AI tools to automate almost half of its credit memos, saving millions. A huge e-commerce company uses their data to vet 15,000 suppliers. And get this, Interpol used Moody's data to untangle these super complex company ownership structures, which led to 83 arrests targeting illegal money. This is where good enough data just won't cut it.
And the strategy? It's clearly paying off. Just look at this chart from their report. Customers who are actually using Moody's AI tools are growing twice as fast as the rest of their customers. This isn't just people playing around with it. It's driving real, measurable growth and embedding their data even deeper into these critical businesses.
So this brings us to the moat, right? The big question. Why can't a competitor just build a large language model and replicate all of this? Well, first, a lot of their data is just flat out exclusive, locked up in commercial agreements they've had for decades. Second, there's the deep curation, years and years spent mapping out complex corporate family trees. Third, there's what they call semantic context, which is that critical human expertise to know that a legal term in one country means something totally different in another. And finally, you've got ironclad governance, which for their clients is completely non-negotiable. The bottom line here is simple. An AI can't synthesize trust.
So, the strategy is sound, it makes perfect sense, but does it actually translate to the bottom line? Let's take a quick look at the financial results because, wow, they are impressive. First up, a record year. Moody's pulled in over $7.7 billion in total revenue. That shows you there's huge demand for both the picks and the shovels.
And that revenue is flowing right down to profit.
Adjusted earnings per share, up a massive 20%. This isn't just growth for the sake of growth, it's seriously profitable.
And this, for me, might be the most important number of all. Look at the quality of that money. An incredible 97% of the Moody's Analytics revenue last quarter was recurring. This isn't one-off project work, folks. It's a stable, predictable subscription engine that just gets more and more valuable as AI gets bigger.
So, as we wrap this all up, it leaves us with this really big question to think about. In a world where AI models are basically becoming commodities, is the real, lasting value not in the code itself, but in the unique, verifiable, decision-grade data that gives it context? Moody's is betting its entire future on that idea, and so far, it really looks like it's paying off. Thanks for tuning in.